All right, welcome back, everyone. Today, we're going to do a deep dive into some recent news from the financial markets.
Sounds good.
We're going to be trying to figure out what's been happening with the British pound,
Oh,
specifically against the euro and the dollar.
interesting.
And, you might be thinking currency markets, like, who cares?
Right.
But this deep dive is all about understanding how things that are happening globally can actually impact your investments, even if you're not directly trading currencies.
Yeah, that's right.
We're going to be looking at a couple of different news articles, some analysis from the financial markets.
Okay.
So to kick things off, I think a good place to start would be with those U.S. inflation numbers that came out recently.
Yeah, so those were a bit of a surprise.
Yeah,
Higher than expected, and, that really sent a shock through markets.
it did. It was like someone hit the panic button.
Yeah, for sure.
And it seemed like a lot of investors were hoping that the Fed, the U.S. Federal Reserve,
Right.
would cut interest rates to boost the economy.
Yeah.
Even President Trump has been pretty vocal about wanting that.
Yeah, he's been tweeting about it quite a bit.
Yeah, so how do those high inflation numbers affect the Fed's decision-making when it comes to interest rates?
Well, lower interest rates generally encourage people to borrow and spend more,
Right.
which can stimulate the economy.
Yeah.
But when inflation is high, like it is now,
Mm-hmm.
it can make the Fed really hesitant to cut rates
I see.
because lower rates can sometimes actually make inflation worse.
So it's this balancing act.
Exactly.
They want to keep the economy growing, but they also need to keep inflation under control.
Exactly. It's a tough job.
Yeah, for sure.
And this unexpected inflation report, it really makes that balancing act even trickier.
For sure.
So what do you think? How did this news affect the British pound?
Yeah, so from what I read, it sounds like the pound weakened against both the euro and the dollar.
Yeah, you're absolutely right. It did weaken.
Okay.
And that's because, when investors get nervous, they often move their money out of what they see as riskier assets
Okay.
and into things that are seen as safer.
Makes sense.
This is sometimes called a risk-off sentiment in the market.
Okay.
Think of it like seeking shelter during a storm.
Yeah.
The US dollar and the euro are generally seen as safe havens during times of uncertainty.
Mm-hmm.
So they tend to strengthen when things get a little rocky.
Okay, that makes sense.
Yeah.
But here's where it gets really interesting to me. The pound actually went up in value. It strengthened against the Australian and New Zealand dollars.
Interesting.
What's up with that?
Well, they are considered pretty stable,
Yeah.
but they're also considered a bit more risk sensitive than, say, the US dollar or the euro.
Okay.
So in this case, with the market reacting to the US inflation news,
Yeah.
investors kind of pulled back from currencies that are linked to economies that are seen as more reliant on global trade and growth,
Okay.
like Australia and New Zealand.
So it's not just about like one currency going up or down.
Right.
It's about how it performs relative to other currencies depending on all these factors that are happening in the world.
Exactly.
All right.
And, this brings us to another important point. There's a chart in one of the articles that I think is really helpful.
Okay.
It shows the U.S. stock market,
Okay.
specifically the S&P 500 index, dipping at the same time that the pound is weakening against the euro.
Yeah.
And I think that visual really highlights how connected everything is.
It does.
Yeah. It's all linked.
So one event like this U.S. inflation report can trigger a chain reaction across different markets all over the globe?
Yeah, 100%.
Wow.
And that's why it's crucial to understand the bigger picture.
Mm-hmm.
These aren't just isolated events.
Right.
What happens in one part of the world can definitely impact what happens elsewhere.
Absolutely. So from your perspective as an expert, what's the most significant takeaway from all of these market movements?
Well, I think it really underscores just how powerful investor psychology is. Currency values, they're not just numbers on a screen.
Yeah.
They reflect global sentiment,
Right.
how confident or worried people are about the future.
Yeah.
And right now, there's definitely a sense of uncertainty in the air, which is driving a lot of these reactions.
Okay, and let's not forget about President Trump putting all this pressure on the Fed to cut interest rates.
Oh, right.
He's been really vocal about it.
Yeah, he has.
Does that add another layer of complexity to this whole situation?
It certainly does.
Okay.
You have the Fed trying to maintain its independence
Mm-hmm.
and make decisions based on what they believe is best for the economy,
Right.
while also being mindful of the president's views,
Yeah.
which, he's been making very public.
Right.
It's a delicate balancing act,
Okay.
to say the least.
So what's the outlook? Like, what might we expect to happen next?
Well, one possibility is that the U.S. dollar continues to strengthen,
Okay.
particularly against currencies like the pound.
Mm-hmm.
And this is where things get a little counterintuitive.
Okay.
Remember all those tariffs that President Trump has imposed?
Oh, yeah, the trade wars and all of that.
Exactly. Those tariffs can actually push import prices higher,
Okay.
which can, in turn, make a country's currency more valuable,
Okay.
at least in the short term.
Interesting.
It's all about supply and demand.
Right.
So a stronger dollar taking a side effect of those tariffs,
I see.
which could further impact the pound.
So you're saying that President Trump's actions that are aimed at boosting the U.S. economy,
Right.
like the tariffs, might actually end up hurting the pound.
Potentially, yeah.
That's fascinating and a bit mind-boggling, to be honest.
It is. It is.
Yeah.
But there's another twist to consider.
Okay.
The Fed could still make a move that surprises everyone.
A surprise move. What do you mean?
They could decide to be more dovish.
Okay.
Now, dovish basically means they might prioritize economic growth over fighting inflation and decide to cut interest rates anyway.
Wait, so even with inflation being a concern,
Yeah,
the Fed might still lower rates?
it's possible.
What seems kind of risky, doesn't it?
It does come with risks,
Yeah.
but it's not entirely out of the question.
Okay.
And that's why, predicting what will happen in the economy, especially when it comes to currencies, is so tricky.
Yeah.
There are so many variables.
Right.
And sometimes the unexpected happens.
This is definitely way more complex than I initially thought.
Yeah.
It seems like anything could happen next.
Yeah, that's the fun part.
The fun part.
I think so.
Yeah, it really makes you realize that even like small changes in policy by a central bank like the Fed
Oh, yeah.
can have these like ripple effects throughout the entire financial system.
Yeah, absolutely.
Crazy.
Those ripples can end up affecting you directly.
Right.
Even if you're not, actively trading stocks or currencies or anything like that.
Yeah, and then a lot of people assume that these currency markets are only relevant to like,
Right.
Wall Street types.
Yeah.
But the reality is that these fluctuations can impact.
So many things.
Yeah,
Like, for example, they can affect import and export prices,
right.
which, can make the things you buy from electronics to groceries more or less expensive.
Yeah, it's like this domino effect.
Yeah.
The Fed adjusts interest rates, the pound weakens, and then suddenly that trip to Europe that you've been planning
Right.
just got a lot pricier.
Exactly.
And speaking of the Fed, we were talking earlier about President Trump putting all this pressure on them to cut rates.
Yeah.
What are your thoughts on that? Seems like it adds like another dimension to this whole situation.
It does. It raises important questions about the independence of central banks.
Right.
Ideally, central banks should be able to make decisions based on what they believe is best for the economy
Right.
without, undue political influence.
Yeah, because it's not like he's just, voicing an opinion or something.
Right.
He's actively trying to influence the Fed's actions, and those actions have real consequences for people.
Absolutely. And that's why it's so important to understand the nuances of these situations.
Mm,
It's not just about, looking at economic data points in isolation.
right.
It's about understanding how politics and investor psychology and global events, they all interact to shape the financial landscape.
Yeah, I'm starting to see a bigger picture here.
Yeah.
It's like a giant chess game with all these different players making moves and counter moves.
It is. That's a great analogy.
And we're just trying to figure out like what the next move might be.
Right.
And how it might affect us.
Exactly. And, that's why even the most experienced economists,
Yeah,
they can't always predict what's going to happen next.
right.
There are just too many factors at play.
So if even the experts can't like predict the future with certainty, what hope is there for the rest of us?
Well, it's not about having all the answers, right? It's about understanding the forces at work,
Right.
being aware of the potential risks and opportunities,
Yeah.
and then making informed decisions based on the best available information.
So knowledge is power, even when it comes to something as, unpredictable as the financial markets.
100%.
But this stuff can be overwhelming.
Oh, yeah.
All these like complex terms, all these interconnected factors.
It's a lot.
Like where do you even begin to make sense of it all?
But, that's where taking a deep dive like this can be so valuable.
Yeah.
By breaking down these complex topics into smaller, more digestible pieces, we can start to see the patterns,
Right.
make connections.
Yeah.
And the more we understand, the better equipped we are to navigate the financial landscape, whether it's planning for a trip abroad,
Mm-hmm.
making investment decisions, or just staying informed about what's happening in the world.
I love that. It's like having a compass to help us navigate these often turbulent seas of finance.
Right.
But before we get too carried away, let's bring it back to the pound sterling.
Okay.
We've talked a lot about its recent like volatility.
Yeah.
But what about the longer term outlook? Like what are some potential scenarios?
Well, as we've discussed, a lot depends on what the Fed decides to do about interest rates.
Mm-hmm.
If they continue on their current path
Yeah.
and don't cut rates anytime soon,
Right.
then the U.S. dollar could continue to strengthen,
Okay.
and a strong dollar could put further downward pressure on the pound,
So in general, a strong dollar means a weaker pound.
relatively speaking.
Yeah.
But it's not quite that simple.
Right.
There are other factors that come into play, too.
Yeah.
For example, the overall health of the UK economy.
Right.
If the UK economy does well,
Mm-hmm.
the pounds could strengthen, even if the dollar is also strong.
Okay.
And of course, there's always the possibility of unforeseen global events
Oh, yeah.
that could throw a wrench into things.
Right, those wild cards are always out there.
Always.
So you're saying it's not necessarily time to panic and exchange all of our pounds for dollars just yet?
I wouldn't jump to any conclusions just yet.
Okay.
Remember, we're talking about possibilities here, not certainties.
Right.
A lot can change in the financial markets very quickly.
It sounds like we need to buckle up and prepare for more twists and turns in this currency roller coaster ride.
I think so.
But here's what I'm taking away from this conversation so far.
Okay.
Global events have this ripple effect that extends far beyond their immediate location.
Yeah.
Currency markets are way more interconnected than we realize.
Mm-hmm.
And knowledge is our best defense against, the uncertainty of the financial world.
Yeah.
Would you say that's a fair assessment?
Absolutely. You've hit the nail on the head.
Right.
And that's really the point of diving deep into these topics, isn't it?
Yeah.
It's about empowering ourselves with information so we can make better decisions, both financially and in other areas of our lives.
It's easy to feel overwhelmed by all the information out there.
Oh, yeah.
But conversations like this, I think, really help to break it down into manageable pieces.
Right.
It's like that saying, a journey of 1,000 miles begins with a single step.
Exactly. And by taking my first step
Yeah.
and engaging with these complex topics, we can start to build our understanding and make sense of the world around us.
Speaking of taking steps, is there anything our listeners can do proactively to navigate these uncertain economic waters?
Sure.
Are there any practical steps they can take?
There are definitely some things people can do.
Okay, great.
First and foremost, I always recommend diversifying your investments.
Okay.
That means not putting all your eggs in one basket, so to speak.
Right.
Spread your investments across different asset classes like stocks, bonds, and real estate.
Okay.
This can help mitigate your risk
Yeah.
if one particular area of the market takes a hit.
Diversification. Got it.
Yeah.
That makes sense.
Right.
But what about for people who aren't big investors?
Right.
What can they do to kind of protect themselves from currency fluctuations?
Yeah.
Especially if they're, planning to travel abroad or something.
That's a great question.
Yeah.
If you're planning a trip
Mm-hmm.
and you're worried about the dollar getting stronger, which would mean you get less foreign currency for your dollars,
Right.
you might consider purchasing some of that foreign currency in advance.
So lock in the exchange rate before it potentially gets worse.
Exactly.
That's a smart strategy.
Yeah.
Any other tips for our travelers out there?
Absolutely. Another thing to consider is using a credit card that doesn't charge foreign transaction fees.
Oh, yeah.
Those fees can really add up
Yeah.
if you're making a lot of purchases abroad.
I've been caught by those fees before.
Yeah, they can be sneaky.
Yeah, it's good to be aware of them.
For sure.
So let's zoom out a bit and talk about the bigger picture.
Okay.
We discussed some practical tips.
Yeah.
But what are some of the potential long-term implications of these currency trends?
Right.
What could happen if, for example, the US dollar continues to strengthen?
Well, a strong dollar can have a significant impact on global trade.
Okay.
If the dollar is strong,
Yeah.
it means American-made goods become more expensive for buyers in other countries.
Right.
And this can hurt U.S. exports
Okay.
because those goods become less competitive on the global market.
So a strong dollar isn't always a good thing, especially for businesses that are trying to sell their products internationally.
That's right.
Interesting.
It's a complex issue
Yeah.
with trade-offs.
Right.
A strong dollar can benefit American consumers because it makes imported goods cheaper,
Right.
but it can hurt American businesses that rely on exports.
I'm realizing more and more that there's just so much nuance to all of this.
Oh, yeah.
There are always different perspectives to consider.
Right.
We can't just look at things in, black and white.
I completely agree. It's all about understanding the complexities
Yeah.
and being open to different viewpoints.
I think we've covered a lot of ground in this deep dive.
We have.
We've explored the recent roller coaster ride of the British pound.
Mm-hmm.
We've dissected the Fed's dilemma.
Yeah.
And we've even touched on this fascinating interplay between politics and economics.
It's all connected.
Yeah, but before we wrap up, I have one final question for you.
Oh.
If there's one key takeaway that you hope our listeners will remember from this conversation, what would it be?
I think the most important thing to remember is that the world of finance is complex.
Yeah.
And always changing.
For sure.
There's no magic formula or, crystal ball
Right.
that can predict exactly what will happen next.
Right.
But by staying informed,
Mm-hmm.
asking questions, and having thoughtful discussions like this one,
Yeah.
we can become, more comfortable with the uncertainty
Right.
and make more informed decisions.
I love that. It's
Yeah.
about embracing that complexity, not being afraid of it.
Exactly.
And, it's funny.
Yeah.
We started this deep dive talking about the British pound,
Right.
but we've ended up exploring so much more.
We have.
The global economy, the role of central banks, even the impact of presidential politics.
Yeah, it's all connected.
It really highlights just how interconnected everything is.
It does. It's a reminder that we can't view these financial events in isolation.
Right.
They're all part of a much larger, constantly evolving story.
Yeah.
And by understanding that bigger story, we can start to see how seemingly distant events can have a ripple effect on our own lives.
And that ripple effect can feel pretty daunting sometimes,
Yeah.
especially when you're like bombarded with all these headlines about market crashes and trade wars.
It's true. It's easy to get caught up in the fear and uncertainty,
Yeah.
but that's why it's so important to stay informed, to keep learning,
Mm-hmm.
and to focus on the things we can control.
Okay, so let's talk about control for a minute.
Okay.
We've discussed some like practical steps our listeners can take, like
Yeah.
diversifying their investments, being mindful of those foreign transaction fees when traveling.
Right.
But what about the bigger picture?
Yeah.
What's one thing our listeners can do to feel more in control of their finances,
Okay.
even in a world that feels, increasingly unpredictable?
That's a great question. I think the most powerful thing anyone can do is to cultivate a mindset of continuous learning.
Okay.
The financial world is constantly changing.
Yeah.
So it's crucial to stay curious, keep asking questions,
Mm-hmm.
be open to new information,
Right.
whether it's reading articles, listening to podcasts like this one, or taking courses.
Yeah.
There are so many resources available to help people expand their financial literacy.
I love that.
Yeah.
It's about empowering ourselves with knowledge so we can navigate these complexities with confidence
Exactly.
rather than, feeling overwhelmed by them.
And remember, you don't have to become a financial expert overnight.
Right.
It's about taking small steps,
Yeah.
building your understanding gradually,
Mm-hmm.
and surrounding yourself with, resources and people you trust.
So knowledge is power. Curiosity is our compass.
Hmm?
And a healthy dose of skepticism never hurts.
Couldn't have said it better myself.
Well, on that note of wisdom and empowerment,
Right.
we'll bring this deep dive to a close.
Sounds good.
But remember, this is just the beginning of your financial education journey.
It is.
Keep exploring, keep asking questions,
Yeah.
keep those brains buzzing.
Absolutely.
Until next time, fellow knowledge seekers, stay curious.